the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3 and it's now time for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors and of course the companies to watch. But as always, a quick recap of some key movements on the SGX. Well, Singapore shares fell today despite a broadly positive day in Asia. So if you look at the Straits Times Index, it was down 0.79% at 4,197 points at about 12:53 p.m. Singapore time, and that is with a value turnover of some 671 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended in the red as well, down 1.02% at 4,187 points. Now in terms of value turnover, we are looking at 1.47 billion Sing dollars. Gainers trailed losers, 268 versus 269. Top advances for today, we've got for you New Incorporation USD, Jardine Cycle and Carriage, and Soil Built Construction. And top decliners, let's take you through them. We've got for you GMH USD, UOB and ST Engineering. Now in terms of counters to watch, we have iFast because the group on Friday announced that its Malaysia Incorporated subsidiary iFast Pay Malaysia received in principle approval from Bank Negara Malaysia to operate as an electronic money issuer and to hold a money services business Class A license. Now elsewhere from Singapore's key exports sliding more than expected in July to how Japan's Nikkei share average hit a record high today, we've got more international headlines in focus. Well, first things first, let's start with the counters to watch on the SGX. Now, we shared with you a little about iFast earlier. Now, just to recap, iFast on Friday announced that its Malaysia Incorporated subsidiary, iFast Pay Malaysia, received in principle approval from Bank Negara Malaysia to operate as an electronic money issuer and to hold a money services business Class A license. But what does this mean, right? How significant is this? Well, iFast said that this is a regulatory milestone in Malaysia that paves the way for it to introduce payment-related services complementary to its existing suite of wealth management and digital banking solutions. So if we look at shares of iFast, it was down 0.102% on last track. Aside from that, we are also tracking for you Frasers Hospitality Trust and Frasers Property, because the latest attempt to privatize Frasers Hospitality Trust succeeded on Friday. We've got 618 out of 718 stapled security holders present voting in favor of the proposed privatization scheme. And this really follows Frasers Property's proposal to privatize Frasers Hospitality Trust at 71 Singapore cents per stapled security on the 14th of May this year, citing the trust's inability to improve its distribution and growth due to macroeconomic headwinds. And the proposal in May was Frasers' second attempt in 3 years to take Frasers Hospitality Trust private after a failed bid in September 2022. So if we look at units of Frasers Hospitality Trust, up 0.709% on last track, and units of Frasers Property down 1.562% on last track. Well, now that we've talked about the counters to watch on the Singapore Stock Exchange, let's talk about the latest NODX numbers out of the country today. Well, Singapore's key exports dropped more than expected in July, reversing from a rebound in June. That's, of course, as front-loading of orders dissipated towards the end of US President Donald Trump's tariff pause on the 1st of July. So if we go by data from Enterprise Singapore out today, it showed non-oil domestic exports on NODX contracted 4.6% in July from a year ago. That's after a revised 12.9% expansion in June. So the reading was worse than the 3.8% fall forecast by economists in a Bloomberg poll. In particular, if we look at key exports to the United States, which is Singapore's single largest export market, that plunged 42.7%. Shipments to China fell 12.2%, and shipments to Indonesia dropped 32.2%. So in July, shipments of electronic products increased 2.8% year-on-year, down from the 8% growth we saw in the previous month. And non-electronics shipments fell 6.6% in July, reversing the 14.4% jump in the previous month. So some numbers to think about as we navigate a higher U.S. tariff environment. Now, further away across the region, Asian stocks were mostly higher while oil dipped ahead of talks between U.S. President Donald Trump and Ukrainian President Volodymyr Zelensky, as well as European leaders in Washington. Now, if you recall back on Friday, Trump met up with Russian President Vladimir Putin in Alaska, but that summit failed to yield any breakthrough on a ceasefire in Ukraine. That being said, Zelensky, who will be joined in Washington by European leaders, called a U.S. offer of security guarantees to Ukraine, quote-unquote, historic. So before the Alaska talks, U.S. stocks wavered on Friday after mixed economic data. We saw retail sales up, but industrial production index and a consumer survey both down. So oil prices, which have been volatile for several days as Russia is a major crude producer, that fell back today, adding to a drop on Friday. So that's what we are seeing in terms of the overall markets. And in Asia in particular, for today, Japan's Nikkei was up, posting a new record high and adding to gains on Friday after better than expected economic growth data. Now, in other markets within Asia, the Hang Seng, Shanghai and Sydney were also higher. Taipei fell back. All eyes, of course, this week, aside from what's going on between the U.S., Ukraine and Russia, is also clues on future interest rates at the Fed's annual retreat at Jackson Hole, or the Jackson Hole Economic Symposium to be exact. Now let's take you through how Asian markets ended the day. Markets ended mostly positive. So Australia's ASX 200 closed up 0.23%. Nikkei 225 in Japan closed up 0.77%. South Korea's Kospi closed down 1.5%. Hong Kong's Hang Seng closed down 0.16% as well, and the Shanghai Composite closed up 0.85%. So Australia, Japan and Shanghai closing there in the green for today. Now, we spoke about Japan in brief earlier, and here are more details because the Japan's Nikkei share average hit a record high today, tracking the Dow Jones higher finish last week. Uniqlo brand owner Fast Retailing was the one that led the gainers. So if we look at the Nikkei more broadly, it was up 0.6% to 43,628 points as of about 8:15 a.m. Singapore time. And the broader topics also scaled a record peak, gaining 0.4% to 3,120 points. Now, the blue chip Dow Jones ended higher after hitting an intraday record high on Friday because United Health shares that jumped after Berkshire Hathaway raised its stakes. But other Wall Street indexes slipped because we saw mixed data that clouding the Fed's next monetary policy move. But as far as Japan is concerned, Japan tracked the Dow Jones higher finish. And if we look at the biggest movers, Fast Retailing rose 1.38% earlier to lend the biggest boost to the Nikkei. And if we look at tech heavyweights, though, they were the ones that weighed on the Nikkei, with SoftBank Group and Sony Group falling 0.42% each back then earlier today. Now, let's take you through some corporate news to think about. We want to look at Google for today because Google agreed to pay a 55 million Aussie dollars or 46 million Sing dollars fine in Australia after the country's consumer watchdog found that Google had hurt competition by, get this, paying the country's two largest telco to pre-install its search application on Android phones, and that excludes rival search engines. So if we look at the country's consumer watchdog, it said that Google struck deals with Telstra and Optus, under which Google shared with them advertising revenue generated from Google search on Android devices between late 2019 and early 2021. But on the whole, if we look at the fine, 46 million Sing dollars, it extends a bumpy period for Google in Australia because last week a court mostly ruled against it in a lawsuit brought by Fortnite maker Epic Games, accusing Google and Apple of preventing rival application stores and their operating systems. And Google's YouTube, if you recall, was also added to an Australian ban on social media platforms admitting users under 16 last month, reversing this earlier decision to exempt the video sharing site. What do you think about that? Well, and finally, here's a piece of news that might interest those who have caught the travel bug before we wrap up the conversation, because we want to take you through what's going on with this travel booking services company called Klook. Well, Klook has reportedly hired investment banks to help arrange a potential IPO in the US, and that is according to two sources with knowledge of the matter. So here's what the sources said, okay? They said the Hong Kong-based company, which is backed by investors including your SoftBank Group and Goldman Sachs, is working with bankers at Goldman, Morgan Stanley, and JP Morgan on the planned first-time share sale. Now, the sources said, the deal could come as early as this year and could raise around $500 million, though the timing and the deal signs are subject to market conditions. What do you think about that? But either way, if we look at the broader market, U.S. IPO activity has gained momentum, bolstered by strong tech earnings and also signs of progress in trade negotiations, which have, restored investor confidence. If we look at recent listings, we have cryptocurrency exchange operator Bullish with design software company Figma, and they underscore the uptick in market debuts. And basically, that reversed a period of the year when uncertainty over Trump's tariffs weighed on new offerings. Now, as far as Klook is concerned, Klook, Goldman Sachs, and JP Morgan declined to comment, while Morgan Stanley did not respond to a request for comment. What do you think about that? Well, let us know your views anytime at 8855-0893. You have the magic number, 8855-0893. We'll love to hear your thoughts. But that's all that I have for you on Market View. I'm Chua Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.